what I look forward to see coming is what they're going to do to try to stimulate mortgages.
Yeah, the stimulation of mortgages. I'm going to throw this to you, Dylan, because it's a bigger story. I don't know if you've heard about this new, I think they call it the LLPA, their loan level price adjustment that starts on May 1st. So we're already working on timelines between now and August of how much stuff is going to happen. But have you heard about this, Dylan?
I don't know if it's the same thing. I heard something that it adjusts the rate based upon how qualified you are, and like
That's right.
to basically the lesser qualifications you have, the better rate you get.
Yes,
The more
exactly.
qualified you are, the worse rates you get. So
Yes.
it kind of reminds me of when I was a kid, and I had a brother that didn't perform well in school, but whenever he would get like a B on a test, he would get like something special, and I got A's on my tests and I got nothing. Just reminds me of that. I didn't like that. So it just but the bigger picture of this is you got to be really careful when you set incentives for complex systems, because I've been reading some books on AI, and the whole thing is talking about how do you align this incentives to the problem you want to be solved. Last thing you want is set an incentive for one thing, but it solves another thing, and so the system gets optimized around something that you don't want, and that's what this seems like it's going to do.
Yeah, I'll definitely share my thoughts on this. But Patrick, you and I were talking about this earlier. What's your take on this LLPA subsidy project?
First, I want to recognize that Dylan was mistreated. That wasn't fair that Dylan got A's and never got anything for it. Dylan, if I was your dad, I would have gotten you lots of toys, candy, hugs. I'd bring pizza for lunch because you're a great kid. And if your parents are listening to this, I hope that they feel bad and that they make it up to you. Then what I feel about the loan stuff is like, this is a joke. I have been telling people that the whole reason to have good credit is so that you can get a loan. That's the only reason you need good credit if you want to like buy a house. That doesn't happen anymore. Why do you need good credit now?
You don't.
I'm really asking the question. Like, let's say the average American today decides, you know what? Instead of paying my bills for the next 2 months, I'm going to stack some silver and crypto, and I'm not going to pay my bills. And then they don't. And their credit goes down, and they catch up on their bill again, and they start making their payments again. So what? They missed a couple months, but they're back on track. They have some silver, have some gold. Their credit tanked, and they do it again. They take a skip pay. They don't pay their credit cards. No big deal. They let the interest rack up. Their credit goes down, but they've saved some more gold and silver and crypto. I don't understand. Where's the punishment for being a terrible creditor? If you're going to pay everyone back never or late, why would they loan to you? The whole idea was supposed to say how honest of a human being you were and how likely you were to make good on your payments.
Well,
now you don't have to.
Yeah, it's a two-stage thing. It's like focusing just on the LLPA, right? They're creating another 2008 situation. This is really 2005, where they have the ninja loans, the no doc loans, the stated income loans, where you could just basically write your own mortgage. You could literally. I remember when I was a real estate investor back then, people were saying you should become a mortgage broker and just write your own loans. I'm like, that doesn't sound right. but that's what people were doing. And now we're at the point where we are having the wealthy subsidize those that are, I'll say, with bad credit. But they're incentivizing, hey, bad credit person, do you want a house? Here's how you get in. And they won't worry about the rate, they'll worry about the payment. And then that's basically selling a car. That's what they're going to do. They're going to put people in houses. And then 2 or 3 years later, like what happened in 2008, the bubble will pop. They'll lose their job, or something will happen to them, and they won't be able to make their payments. There'll be a glut of real estate in the market. But these companies are trying to survive by lending because there's no one borrowing right now. So they have to appeal to these weaker creditors, much like in The Big Short, where that's exactly what I never get Michael Burry or Mike. I think that's right. Michael Burry. Okay.
Yeah.
But that's what he picked up on. And he said, these AAA bonds aren't what they're saying that they are. So we have all these things that are teetering all around, and we have commercial real estate. We have the existing real estate. Everybody thought, real estate never goes down until it does. And that's what happened in 2008. And now we're setting the temperature to be right there again. So yeah, it's, and we've got all these different issues that are out there. It's really interesting to piece them all together. But that's kind of what's going on with real estate. Let me catch the other story here.
And I just been talking the credit thing, and like, to be fair, I understand why maybe where some of the sentiment can come from is that part of the reason why credit card debt's at all-time highs because everything, like all the prices have been manipulated, have all been messed with this massive money printing, and then all of a sudden these massive rate changes. There's no way that the average person can predict and prepare for this, and so it's causing them to have to spend more money than they thought they'd have to spend. I mean, just even look at my Uncrustables. You're paying the same for 30% less.
Exactly. And look at, like, as we mentioned earlier, American Express had a great quarter on record earnings because people are borrowing and they can't pay off their, even American Express, where you have to pay it off anyway. I think it's like 30 days you have to pay that off, but Visa and MasterCard, you can let them go so you have, like, you don't have to pay everything off that month. But yeah, people are living on credit right now until they run out, and like the Price is Right is impossible now.
I had a buddy who missed a payment on his Costco credit card, the Citi card, and it went up to like 30-something% interest.